the COVID-19 pandemic has triggered a global debt crisis that threatens to derail the recovery of many emerging markets and developing economies. According to the World Bank, global debt levels reached 263% of GDP in 2020, the highest level in half a century. More than half of low-income countries are in debt distress or at high risk of debt distress, and some have already defaulted on their debt or are undergoing debt restructuring. Debt restructuring and relief initiatives can help ease the debt burden and support recovery in these countries by freeing up fiscal space, restoring debt sustainability, and enhancing growth prospects. However, such initiatives face many challenges, such as coordinating among a diverse and fragmented creditor base, ensuring fair burden sharing among creditors and debtors, and linking debt relief to policy reforms and social spending. Historically, several umbrella frameworks have coordinated debt relief among multiple creditors and debtors on common principles. For example, the Brady Plan in the 1990s helped resolve the Latin American debt crisis by exchanging commercial bank loans for bonds with lower interest rates and longer maturities, backed by U.S. Treasury securities. The Heavily Indebted Poor Countries Initiative and the Multilateral Debt Relief Initiative in the 2000s provided comprehensive debt relief to low-income countries that committed to poverty reduction strategies. In response to the current crisis, the G20 launched two initiatives: the Debt Service Suspension Initiative (DSSI), which offered temporary payment suspension on official sector debts for the poorest countries, and the Common Framework for Debt Treatments Beyond the DSSI, which provides a forum for DSSI-eligible countries to seek debt restructuring if their debt is considered unsustainable by the IMF and the World Bank. However, these initiatives have limitations, such as excluding private sector participation, avoiding outright debt reductions, and applying only to low-income countries. Therefore, there is a need for more ambitious and comprehensive debt restructuring and relief initiatives that can address the diverse needs and circumstances of emerging markets and developing economies. Such initiatives should aim to achieve three objectives: first, to provide sufficient debt relief to restore debt sustainability and create fiscal space for recovery; second, to ensure fair burden sharing among all creditors and avoid moral hazard by linking debt relief to policy reforms and social spending; and third, to enhance growth prospects by supporting green and inclusive recovery strategies that can boost productivity, resilience, and human capital. Debt restructuring and relief initiatives are not only beneficial for debtor countries, but also for creditors and the global economy. By preventing disorderly defaults and protracted litigation, they can reduce financial instability and contagion risks. By facilitating economic recovery and growth, they can increase trade and investment opportunities and foster global cooperation. By addressing social and environmental challenges, they can contribute to achieving the Sustainable Development Goals and combating climate change. Therefore, debt restructuring and relief initiatives are not only necessary, but also desirable for a more prosperous and resilient world.